Hi there again, everybody. Mike Petras here, your Star Realtor of Star and the Treasure Valley, back with another episode of Mikey's monthly market updates here for the month of January 2022. We'll get to that right after this. Welcome back after the break, everybody. Mike Petras here again, your Star Realtor of Star and the Treasure Valley, back with another episode of Mikey's monthly market updates for the month of January 2022. And for those that are new to the updates, just so that you have a little bit of background, this is where I'm going to go ahead and break down what has happened here in the Treasure Valley real estate market over the last month and be able to help you buyers, sellers, and investors determine maybe the best course of action leading forward, and maybe give you some predictions too as well of what I think is going to pop up for the rest of 2022. Now, I do come up with these monthly, so I do click on that subscribe button below so that way you're in tune with all the videos that I do come up with, and click that notification bell too as well. And if you are thinking about making a relocation here to the greater Treasure Valley area, please click in the description below, download my free relocation guide, so that way you're in the know before you decide to make the move. Also, share this video with somebody that you may know that might be useful for them before they decide to make the move. So let's go ahead and let's dive into all that information. All right, everybody. So here's the informational point or part, not point, sorry, of Mikey's monthly market update for January 2022. And I want to say this before we kind of begin. If you do follow these monthly and you did look at the month of December that I had, I do owe you an apology. I mean, there was something obviously skewed in the data reporting because last month I really kind of came out and said, wow, there's a lot of inventory for the month of December, which is really kind of odd considering the holiday season, because that's not normally a trend. Normally buyers and sellers kind of taper off during the holiday season, which reduces the inventory generally. And that was the case as we kind of go through this. I'll show you. But anyways, let's go ahead and start off with Ada County like we normally do here. And as we can see, again, back around April or May of this of 2021, the growth of our equity train that we saw over 2021 and 2020 and even some in 2019 basically kind of came to a straight halt. But we're starting to see a little bit of an uptick, especially when it comes to the average price, the average sold price in Ada County. Now, could that be because, maybe more $1 million homes sold as compared to others? Yes, because keep in mind, the average price is just the average price of everything that's sold, to where the median price that you see here in the blue line is going to be everything that listed, and then finding that middle house, and that's your median price overall. So we can kind of see that we've kind of ticked up and kind of gotten back and maybe surpassed a little bit here the levels that we had back in about June of 2021. So we did kind of come back out, but again, still generally over the months as we have gone along, we have not really seen a good return on our equity that we saw over the last couple of years. One of these things that I did make a little bit of a difference here with this particular Mikey's monthly market update, as you'll notice some changes, is that I went all the way back to 2019 to really kind of show you that growth, and to really kind of show you when we get on to further slides how things fluctuated. So let's go ahead and let's go to the next slide, if I can do it. Okay, and here we go. So we're going to look at the total actives versus solds. So one of the things that I did throw in here too was pendings. That was new because last month I kind of figured that the pendings really had something to do with that spike that I had in my information process. So I just kind of really want to show you, the full outbreak of what's going on in the inventory. And as we do know from prior MMMUs, we do know that our inventory just really went down to nothing. And the reason being is probably because of COVID, more or less, is that people were scared to put their houses on the market at that time, but yet the demand really stayed the same, which led to that just crazy equity growth. Because again, it's a supply versus demand issue, and our demand was still good and we had zero supply. And so we can understand why now the Boise or the greater Treasure Valley area became the hottest market in the entire US. But that is, again, since cooled from what we saw from the prior slide here in Ada County. And then we can actually see, if we go back to 2019 and we look at the blue line, this is where we kind of had some, normalcy more or less in our actual inventory that we should expect here in the Treasure Valley. And then, of course, bam, it just went away. I mean, you can see where it kind of dipped down here in January 2020, and then COVID hit. And then, bam, we just didn't have anything. And everybody here on the gray line that's coming in and buying it up, including the pendings, just absolutely stripped the inventory bare. So that's something that's probably new to you. But as we look into July of 2021, we can see that the inventory started returning all the way up until September of 21. And then, of course, again, I want to apologize. It wasn't creating this big gap like I thought it was going to, or that thought it was in December. But again, it kind of tapered back down here in July. And we can actually see now that the solds are kind of taking over a little bit more for what inventory we've got. But I just kind of anticipate that to be more of a seasonal thing, okay, because the holidays, people didn't want to list their homes. And again, Q1, as a lot of us realtors know, and maybe some savvy investors out there, is usually the slowest time of the year for listings and inventory. But if you're going to ask me my prediction of what is going to happen in 2022, especially now that interest rates are on the rise, we'll get to that a little bit later on here in this episode, but I anticipate our inventory to go back up and maybe actually see some normal levels, if not maybe a little bit higher in 2022, considering that high interest rates plus the housing prices the way that they are going to chase away some good demand here to the area from potential buyers. So sellers, keep that in the back of your mind. Just another breakdown graph to kind of show you the same thing, the total inventory. Again, if we go back here to 19, we can see we had some, stable inventory really. And then again, COVID hit, boom, there it all went away. And then we had our peak, come back up here. But our solds, and you can actually see the pendings, you can see kind of the solds are kind of tapering back, down again. So are we maybe losing some of that demand, already, say, to Ada County? And that could be a possibility. And why would that be the possibility? It's because honestly, the median home price and the median sold price, or the median home value has gone up in Ada County. And a lot of people, when we get to Canyon County, you're going to see that they've kind of made the shift because they can get a cheaper home if they just go over to Canyon County as compared to Ada County, because the median home price is still higher overall in Ada County. So I think that maybe Ada is starting to maybe lose a little bit of its luster, but not much, because there's still a lot of people that are coming in here from out of state, that are coming in with money, and they want to move here for, really kind of just different values. I went through that in another video to where I talked about really the core reasons as to why we're considered the most overvalued market in the US. But really, if you look at in terms of why people are really flocking here to the area, it really makes sense. And a lot of you know why that is. Okay, so let's go ahead. And another thing that I did was broke down existing home inventory as compared to new home inventory. That's something new for this year. And we can see, again, the existing home inventory, the demand. And if we look in July of 2020, look at that demand spike. Look at what we had in terms of the solds. And then look at, our inventory. You can see that gap, and you can see why, our equity growth just went on that incredible train, that we had. Again, even here in January, you can see the solds kind of over surpassed. But again, existing homes back in September kind of kicked back up again, which is some good news. I mean, it really, at that point really kind of took away and kind of ended, the fever pitch that you were seeing out here with multiple offers, on homes. But again, a good listing agent, including myself, knows how to properly, price your home and give you good strategies, especially if you're considering selling in the existing market, to be able to get a lot of traffic to come in and hope to get those multiple offer scenarios to go back to where you're still getting people, fight for your properties. So that is something that as inventory does start to tick back up, again, is just going to kind of flatline that. So, the demand, the general fever pitch that we had kind of, subsided itself. So buyers, if you're getting out there and you're concerned about whether or not you're going to be in multiple offer situations like we saw about a year ago, maybe even a year and a half ago, that has basically generally kind of subsided because, the inventory again, was kind of coming back in 2021. We see that the existing home inventory in January of 2020 has gone down again to astronomical levels. But again, is that due to, say more or less the holiday seasons? I think that has, something to do with it. And I do anticipate the inventory levels to go back up. New construction, again, the same thing. If we look back here in 2019, there was relatively good inventory. And then, of course, COVID hit. A lot of people stopped working or they were required to stop working, et cetera. And, the builders weren't building so much. And then nowadays, it just kind of seems, because, materials, are expensive and we have labor shortages all over the place, as to why I think that the new construction inventory is staying, as low as it is. But, as COVID is starting to kind of lose its grip, over the United States, and, a lot of the mandates are starting to go away or never even took place, to what this current administration really wanted, I do kind of see, the inventory coming back and some of the workforce coming back, which would raise inventory. But you can see that the demand, the solds have basically kind of stayed the same. People, it's generally the process is a little bit easier, or can be, getting into a new home compared to an existing home. And especially that was the case back a year ago. But again, expect these inventory levels, I would say, to rise in 2022 in both counties. And here's another reason why I say this too, as to has the demand has kind of tapered off, a bit to our area. And that I think that the inventory is going to rise, is because if we look at our days on market too as well, we're kind of getting back, to those levels. Now, days on market, again, holidays, let's bring that up again. People were kind of out of the market, but it's just steadily increased as we see, the fever pitch, that we had here start to subside. And I honestly feel that our numbers will probably start to reflect what we saw in January of 19 and January of 2020, and probably, level out to here. So I just kind of see some normalcy, returning to this market, even though that we do have a very high demand. And I do see some inventory coming back, and especially as the interest rates go up, which we'll get to a little bit later. Cancels and expireds. What I really want to focus on here is the expireds, okay, more or less, as the cancels. We can see the expireds are going up. So what this is basically saying is that sellers, that fever pitch to where you could feel that you could charge whatever you wanted for your house, and you would have a lot of traffic coming in and multiple offers, again, as basically subsided. That's really not kind of happening unless if you properly, if you fair market value your house and maybe come in under a little bit. There's strategies that we could talk about if you want to give me a call and you would like for me to come over, talk to you about listing your house. But again, the expireds, the increase in the expireds, as tiny as it is still kind of saying to me that people are really holding on, to the price that they're setting, and they're not expecting any less. And, unfortunately, the market has kind of flatlined itself, and, buyers are coming in a little bit more confident. So there is a little bit of movement happening in here into our market. So again, sellers, good idea to come in fair market value and properly, appropriately price your house so that you can see the traffic results that you're looking for. If you're shooting for the moon, you're going to end up probably like one of the expireds, and your contract will expire and go back out on, it'll be over, unless you want to do it again. Here's another slide that I want to kind of go ahead and put in here, as new to MMMU, and that's the Ada County single family homes. Again, you can see that the median price is up 20% year over year. The homes sold, so our demand is still up year over year too as well, but you can kind of see that number starting to tick down as you go over time. But again, our inventory is what I want to mention here. It's up 63.9% year over year. So again, it's softening up along with our days on market. So that fever pitch, the multiple offer situation, and our inventory, it's going to be most likely back on the rise. So just kind of keep that into the factor. And sellers, if you're thinking about selling your home, the more inventory that's on the market, the harder it is to sell your home because you have more competition out there. Okay, so let's dive into Canyon County. I covered the most with Ada, so we'll kind of jump through this relatively quick. But if we take a look at, say, like the average sold price that we got here, you can kind of see that it ticked back down. But if you look at the levels, that we had, say back in about August here, to where it kind of flatlined up, it kind of tapered up, went down a little bit. But our median home prices also did the same, kind of, double down. But again, Canyon County is cheaper, so you're seeing a lot more influx of people going there, and you can see the median prices kind of raising, and same thing with the average sold price. So Canyon County is going to have generally, that little slight edge. But again, if you're looking for more affordable housing, you're still going to find it in Canyon County right now as compared to Ada County. If we look again at total actives versus solds, again, if we're looking back, you can see why COVID hit, no inventory on the market, demand stayed the same. Again, in September, inventory kind of came back to our market, but again, has since tapered down. But I think it's going to go back up, especially as interest rates go up and take away some of the buyers too as well. But again, I want to show you the pendings to kind of make this more or less relevant. Another aspect, so as I was mentioning, that I think that, Canyon County is just grabbing some more popularity because of its cheaper prices. Well, I mean, look at the pendings here. They're kind of increasingly going higher. Okay. And same thing with our solds. If you kind of look at the pattern, they're roughly the same, but they're also kind of ticking up too. And, even, inventory levels, they had that spike, or the total actives that were on had that spike. But this is just kind of saying to me that people are making the shift generally over to Canyon County as per se Ada County. So again, buyers, if you're looking for, a generally overall cheaper home, you're going to find it in Canyon County as compared to Ada County. So just kind of keep that in mind when you're shopping. Again, existing home inventory, it just kind of speaks for itself. We've kind of beaten a dead horse for Ada County and this. We could see, we really had nothing, just during that month, and the demand stayed the same. Our inventory kind of came back, but also is kind of going back down to those lows that we saw. But the solds are also kind of dipping with it instead of just kind of maybe rising up and still stripping out inventory. But again, I anticipate that inventory to come back. Again, new homes too as well. You're actually out here in Canyon County, you can see, the inventory with new homes. There was just more active new homes, and probably because the builders, figured out, that more people are flocking to Canyon County than per se Ada County. So they're probably actively building out there. I don't know how many total subdivisions over all the cities, but they probably are. They're like, well, we got a lot more traffic, a lot more foothold out here. So that's probably why you see more inventory, coming to the new construction market in Canyon County as compared to Ada. Again, though, same thing, days on market, you're starting to see the trend going up, which again is just letting me know that this market is probably softening, in terms of, multiple offers, the high fever pitch that we saw back about a year ago, and a little bit more than that. And again, the same thing, the expired trend. We kind of beat that again when we were talking about Ada County. The expireds are up, probably because people are really holding on to their home values and they're unwilling to bend. And again, that market is really kind of over. That fever pitch, that we saw for, housing out here during that period about a year ago, year and a half ago, is really kind of subsided itself. So again, fair market value, price your home, and talk to your realtor, including me, if you'd like for me to list your home. talk to us about good strategies to bring more traffic in and maybe create one of those, bidding wars again or multiple offer situations. Again, Canyon County, the median price is on the rise, and so is the homes sold. So the demand is pretty good. But again, that number is kind of tapering off a bit. But the inventory, especially here in Canyon County, up 116.9% year over year. That is really just kind of saying that, hey, this market's kind of maybe cooling a bit and inventory is coming back on as compared to what we had. And then the days on market, again, it's just showing me that it's kind of softening. So buyers, if you were out like a year ago because you were just so sick and tired of losing offer after offer after offer, those days are pretty much kind of come to an end, and we can get you into a house. And honestly, as we go into this next segment, we're going to go ahead and talk about interest rates real quick. You're going to see why that right now is probably really a good time to get in before the interest rates really kind of get out of control. We'll get to that right here in a second. All right, everybody. So just a real quick break because I really wanted to shift what I was talking about and go into interest rates right now, because that's really the precipice, and buyers, please pay attention to this because this is very critical for you, and even sellers too as well, because this is going to have an effect. Okay, so the 30-year fixed loan, really was at about 3.36, and at some points a little bit lower, towards the beginning of 2022. And as you can see by this chart, which was taken back on 2/11, the interest rates have gone up. They've literally gone up almost 3/4 of a point since 2020, or since the beginning here of 2022. The Fed, because interest rates, or not interest rates, but inflation rates are so out of control, they're at 7.5% right now. They went up another 0.5% this last month, and they're not stopping. They're continuing to go up. And the Fed was printing money that they have really no backing to. And the only way to really kind of correct this absolute spiral that this current administration is created, out throughout the entire United States, is to raise inflation rates, on housing loans, on loans, business loans, whatever they can, in order to, correct this and calm this down. Because inflation cannot continue to spiral out of control, because if it does, our dollar's not going to be worth anything. Our economy is going to have big trouble and all that. So that's why that was the whole purpose of the Fed in the first place. And why it got established was to make checks and balances to ensure that we don't go through a disaster like we did back in the 30s. So again, it's on the rise. We were definitely on the rise. And in March, they were actually saying that they're going to make another significant jump. And from what I'm reading, it sounds like another 0.5% is what they want to do in March alone. So right now, today, when I checked, the interest rates were at 4.12%. So even from 2/11 to today, they went up. They went up. And it's just going to keep going up. Even in fact, they were saying that they might even raise it another 7 times throughout the course of 2022. So where is this really going to stop? That's going to be, the big giant question for 2022. I've had some people, and I've read some articles, to where they said, oh, it will stop at, 4% or 3.75. Well, that's already been surpassed. Okay. And it continues to go up. And if we're at 4.12 right now, and it goes up to 4.5, again, that's just more money that you're giving back for what? For what in essence? And it's just going to raise your monthly mortgage payment. So for really every 1% that the Fed decides to go up, you can tack on 10% to your mortgage. And that's just extra money that's really just going back to the bank. So buyers, right now, it's critical, to get in here before the interest rates just get out of control. Now, say they do get out of the control, though, to the point to where inventory comes up, demand starts softening, and we see a market correction. It's going to be a market correction. It'll probably be a small one. It's not going to be anything significant like a 2008 crash. So if you've been waiting, and saying, hey, 2008 will return, no, that's not going to happen, because 2008 was for an entirely different set of circumstances, basically greed and deregulation. Okay. So right now, housing prices, even if they dip down a little bit, is not going to make the difference as compared to what you're going to pay in interest rates. So buyers, keep that in mind, that they can't not come down significant enough to make that change. Housing values are still going to be high, and even if they come down a little bit, it's probably going to bring the buyer pool right back in some competition. So prices will be on a higher end of what you feel that they are higher end, because I hear that from buyers all the time. They say, well, our housing is kind of expensive. Well, yeah, but do you want to pay expensive plus interest rates? It's just going to kind of spiral out of control. And if you are waiting for a crash, you're going to be waiting for a long time, because honestly, it's just not coming around the corner. But anyways, I kind of want to just read off some of these articles. Goldman Sachs Group sees the Federal Reserve raising interest rates 7 times, as I had mentioned, over the course of this year, minus the 5 times that it earlier expected. Okay. And then the one that I want to say, report down here is the city economist said that they expect 3 further hikes in 2023. Okay. So that's next year, following the 1.5 percentage points or 150 basis points hikes in 2022. Well, they've already gone up 0.75, okay, or 75 basis points. So if they're going to go up another half and then another 7 times, is really that going to be it? Honestly, I think that they could get much higher than that, but we'll just have to pay attention to where the Fed actually really stops in order to level out the inflation problems that we've got. So buyers, right now, I really think this is your window, and the sooner you can get in before March, the better. So if you're on the fence about buying, give me a call today. But let's go ahead and let's start the process for you. So I wanted to bring this up again too, because again, buy now or wait, because I did talk about, market correction. So what I want you to do is take this word crash right here and throw it out the window, because when you hear crash, you're thinking 2008, which is not going to be there. So I want you to replace crash with correction. Okay. If it pops up, but let's look at this. Okay, right now rates have gone up, okay, but at $350,000 and say the interest rates are at 2.75% with a 10% down payment, your monthly payment would be roughly $1,810. Now, if the value came down, however, and say it came to, 325.5, okay, based on 10% down, and you're at 4.25, well, your monthly payment is now going to be $1,917. Again, even though the house value came down, and it came down a little bit, it didn't make any difference as compared to the interest rates, because the interest rates will far supersede the damage of any value you get back, from say a market correction. So again, buyers, right now, I really think this is your window, and I really wouldn't wait, terribly too much longer, because it could possibly price you out. If interest rates go high enough with home values, maybe going high, say inventory doesn't come back, buyers, real quick, let's change this subject real quick. Say the inventory doesn't come back, but the demand is there. It could start spiking home values again, which will continue to go up along with the interest rates, which could really absolutely take you out of the market. I don't think that's going to be the deal. I think the inventory is going to come back because of interest rates going up and chasing away some of the buyer demand. But we'll just have to see and wait see what happens. We'll really kind of know a little bit more about inventory flux probably in about Q2, which at that point, the interest rates are probably going to be significantly high. So buyers, good time to be in here right now. Okay. I also just kind of want to go through too and talk about, housing prices versus median income. If you've been on the fence about buying, it's like, do I make enough? And of course, right now, we know that, the housing prices have soared about 150% since 2015. And for Idaho workers, basically all you've gotten is another 25 to 32% increase in that same time in your overall wages. Now with inflation going up too as well, it's stripping even more, out of you. So I do know that. They're also expecting like the wage increases to taper off over the next 2 years. And, but again, it's one of those things that if you have the means, again, don't wait. The interest rates are going to come take it out of you. If not, interest takes it out of you. And honestly, buying a home is a great way to hedge against this inflation, a very awesome way to hedge against this inflation. So again, if you want to protect yourself, from inflation hurting you real bad, investing in real estate is a good idea. But what I want to kind of bring out of here was just saying that it's not necessarily preventing people from moving here. That's very true, because I think that a lot of the natives, that grew up here in Idaho, and even from California, Oregon, Washington, Texas, wherever you're coming from, you're coming from out of state. So again, it's still a lot of people that are coming from out of state with money that's really kind of propping up, our economy or our real estate market. From what I think if that stops, for any reason, well, some interesting things could happen here in the Treasure Valley, but I don't see that happening because, again, why are the people leaving these other states? It's because of values. They're willing to make that lateral move and come over because they want more conservative values in their life than they do liberal policies that are happening in California, Oregon, Washington, etc. And they have more money when they turn around and sell their homes, and this is still affordable to them. But that is kind of changing. I do want to say that to people. I'm noticing that even a lot of people that I advertise to coming in from out of state are kind of saying, well, your market really kind of jumped up. Well, yes, it did. Absolutely. But it all kind of depends on your means and what you want to do and what your values really are. Again, if you're coming in from out of state and you're moving away because of maybe, say, political reasons, really you're making a lateral move over here to Idaho now in order to have, those real American values that you're probably just not seeing in the other states anymore. All right. So that basically kind of sums that one up. I will go ahead and get to my final conclusions and my final thoughts for you right after this. All right, everybody. Hey, thank you again very much for sticking through all that. I know there was a lot more information this time around than you're probably used to on the other MMMUs or Mikey's monthly market updates that I do come out with. But I just wanted to kind of break it down to show you a little bit more of what's really kind of happening and where a lot of this is kind of being allocated to really show you why I base my predictions the way that I do and what I really think is going to be coming up here for 2022. So thanks again for sticking around with that. So let's go ahead and let's summarize here. So buyers, pretty cut and dry. You've seen it throughout, this entire presentation. Interest rates are on the rise. Inventory is back low for now. Demand is still kind of relatively staying good. And the housing prices are going nowhere. In fact, if anything, they're probably starting to taper up a little bit in the median housing price and the median average sold. So again, buyers, interest rates is what I really want you to focus on at this point because they are going up. Again, almost 3/4 of a point since the beginning of 2022. And the Fed, it already wants to raise it another 0.5%, maybe in March alone, and then another 7 times. So we really don't have the crystal ball in terms as to where the Fed is going to end up with this. But again, you're just giving really money back away to the bank. For what reason? So get in there while interest rates are still low, and that window is closing, and it's closing fast. And it's closing fast because our inflation rates are just out of control. And the only way that they can stop this decline that's been the worst that we've seen in 40 years, is by raising the interest rates. So again, if you've been on the fence about buying, honestly, get in there. And even if we do see a market correction here in late 2022, say Q2 or Q3, Q4, something like that, or even into 2023, for any reason, the value savings that you're going to get, in my opinion, is not going to make up for the damage that you're going to see from the interest rates. So buyers, if you are looking to buy, reach out to me today, 208-715-STAR. That's 208-715-7827. And let's begin talking about this today and getting you relocating here or getting you into a home. And again, if you are thinking about relocating, please click in the description below, download my free relocation guide. So that way you have all the information available at your fingertips before you do decide to make that move. So sellers, let's go ahead and let's talk about you. So right now, our demand is still good. Our inventory is still low. I mean, could that start raising our home values and start the upward trend again if the inventory will really stay low? Yes, it could. But at the same time, do I anticipate that with interest rates going up and taking probably taken out some of the buyer pool that we've been seeing, I see that happening. Okay. And I see the inventory kind of coming back up. And I see the inventory maybe possibly surpassing some of the demand. Okay. Which would make more competition for you to sell your home. So the question is still kind of out, but honestly, with interest rates going up, I just see the ladder of that discussion to where it's going to chase away some of the buyer pool, put more inventory on, and create more competition for you to sell your house. And then on top of that, if the inventory were to really spike up and say the demand falls off, out here, or really significantly gets hurt because it chases away some of the buyer pool, well, then very well, we could see a market correction, and you could lose some value in your house. Yeah, I mean, again, that could be coming later on down this year, or maybe even early into 2023. We'll kind of see. But right now, we just haven't seen, any kind of a significant growth really in the equity train that we were seeing over the last couple of years. It's really kind of plateaued off. So right now could be a really, really good time for you to list your house. And if you do want to create like bidding wars or et cetera like that, again, to get or just get a lot of traffic to your house, really, and hope to get multiple offers. Again, price it fair market value, maybe a little bit under, is a really good strategy. And if you want to know more strategies, definitely give me a call. Again, you can reach out to me at 208-715-STAR. Again, that's 208-715-7827. We'll go ahead and set up an appointment, and I'll come and take up about 15 minutes of your time. And we'll talk about the sale of your home and whether or not it's advantageous and everything else that comes with it. All right, everybody. Well, that basically kind of sums up what I have to tell you here about what's happening in January 2022. I'm really curious to see what happens, for February 2022 and leading into the rest of the year. But again, thank you so much for taking the time out of your day to watch this lengthy video. I do apologize about that. And again, if you're looking to buy, sell, or invest here in the Treasure Valley, please feel free to reach out to me, 208-715-STAR. Again, that's 208-715-7827. Also, if you feel like you want to start your home shopping experience, buyers, please feel free to visit my website at www.yourstarrealtor.com. Also, don't forget to hit that subscribe button down below so that you're constantly in tune with all the videos that I do come up with, and hit that notification bell so that you're in tune when they do pop up. And again, if you are looking to make a relocation here, click in the description button and download that free relocation guide, which will give you all the information you want to know before you decide to make the move. Well, I look forward to speaking with you. I look forward to fielding your questions when you do have them. I look forward to one day talking with you and calling you my neighbor. God bless. Until that day, we'll talk then. Thank you so much. Bye-bye.